QuickBooks Online 2021. Adjusting entry, prepaid insurance within QuickBooks. Let's get into it with Intuit's QuickBooks Online 2021. Here we are in our Get Great Guitars practice file. We're going to start off opening our reports up by duplicating the tabs up top, right-clicking on the tab up top, duplicate 2 more times, right-click on the tab up top, duplicate 1 more time, right-click on the tab up top, and duplicate. We're going to be having the trial balance, then the profit and loss or income statement, followed by the balance sheet. We'll go down to the reports on the left-hand side, search for the trusty trial balance, the TB trial balance, and then we'll do the range change up top, ending point being 022821, and run that report. Then we'll close up the hamburger up top, hold down Control, scroll up just a bit to get up to that 125%. Next tab to the left, we're going to go down, then do the same routine, reports, but this time opening up the profit and loss, the P&L, the income statement, range changing it up top to the endpoint of 022821, and then we'll run that report. Closing up the hamburger, next one over to the left, next tab to the left, this one's going to be our balance sheet, the good old balance sheet. We're going to go into it and open it up, range change up top, ending at 022821, run that report, close up the good old hamburger. So what we're doing now is our adjusting entry for prepaid insurance. In prior presentations, or when we enter the data into the system, we entered, and this is kind of standard if you're depending on making adjusting entries. So if you're depending on making adjusting entries at the end of the month or year, then whenever you pay for insurance, we will not put it into the insurance expense, but rather into prepaid insurance. This is especially useful if you're paying insurance for multiple periods, multiple months, for example, because you will then have a timing difference as to when you pay for the service, the insurance, and when you get the benefit, meaning the coverage that will be received. So in that case, you would want to put everything into basically prepaid insurance, and then as time passes, typically on a periodic basis, typically monthly, you would then reduce the prepaid insurance for the amount that had been covered. What we would do is look at the insurance policy, see what amount had been covered or how much had then been consumed in terms of usage, and decrease the prepaid insurance and record expense for each time period. That makes it more easier to compare. The matching principle is met by doing that. If I compare January to February or February to March, for example, then we're not going to have this big expense in one month and no expense in the other month when both months were benefited from the payment for insurance. That's the concept. However, note that if you are a small company and you're doing basically this for taxes and you want to make sure that your accountant picks it up at the end of the year, then you might do it the other way. You might put this on the books and just expense the insurance expense. Or if you're paying insurance monthly and you're pretty close, instead of paying for the whole year of insurance or multiple years of insurance, you're paying it month by month, then it might be worthwhile just to expense it as you go. If that's the case, then you could still do the adjusting entry if you want to. So if you had the year's worth of insurance, for example, and you put all the insurance as an expense, as insurance expense, and possibly you need to make the financials and then do your adjusting entry, you can do the adjusting entry the other way, right? You can reduce the amount of insurance expense for the amount that had not yet been consumed and put the prepaid insurance on the books periodically at the end of the month or year. You don't typically want to do it that way if you're planning on doing adjusting entries, because these are temporary accounts and they're going to roll into the equity section. So it kind of complicates the adjusting entry process to do that. So if you have a good system of adjusting entries set up, then you would prefer to put them in to the prepaid insurance and then allocate them out. It does take a little bit more work, of course, to do that method rather than just expensing them, as you pay them. Okay, so that's going to be the process. We did it in Excel last time. So we saw the example in Excel. This is going to be the adjusting entry. We're basically going to be decreasing the insurance here, and then the other side is going to go to the insurance expense, the calculation that we had. If we pull out the trusty calculator is going to be here. We're going to say that it was a year's policy that started in February, so 1 month has then passed. So we're going to be taking then the 11,000 divided by the 12 months, and that's going to be $619 that we are 67 cents that we're going to make for our journal entry. Within QuickBooks, that's the wrong QuickBooks, this QuickBooks, we're going to be doing this into, we could do a journal entry, but we're going to use the register whenever possible. The register we will be using will be the prepaid insurance register because it is already set up. So let's go to the first tab then, and we're going to say that let's open up the hamburger. We could then use a journal entry like this with the debits and credits, or we can go to the register, and that would be down here in the accounting tab, which will still basically record a journal entry. I'm going to close up the hamburger. I'm going to look for the balance sheet account, which was the prepaid insurance, this one, because it has a register. Remember that if you're going to use this register method, you can't do so if you're going down here and using an income statement accounts because they don't have the register. So you got to choose whichever side of the transaction you are working on that is a balance sheet account. Then you can kind of use this register method. So I'm going to go, all right, let's go into the prepaid insurance register, noting that I'm in prepaid insurance now. Then I can say, well, this is the account that needs to be going up or down. The prepaid insurance, in our case, needs to be going down because we're decreasing the prepaid insurance. So I'm going to hit the drop down. I would like to do it in the format of a journal entry. So we're still basically doing a journal entry as of the cutoff date, as is all of our adjusting entries, 02/28/21. And we're going to call this one, what do we call this one? AJE5. And it already has that there. That looks good. Memo, I'm just going to call AJE5. We could put more descriptive than that, but that's where I'm going to keep it. And this is going to be 916.67. Decrease, other side going to the insurance expense. So we'll scroll on down, insurance expense, there it is. Let's save it and close it. What's this going to do when we do this? Obviously, it's going to decrease the prepaid insurance. The other side going to insurance expense, which will be increasing it, which will then decrease the net income. So we're going to say save it and close it. We have our balance here in our insurance account now at the 10,083. So that looks, I think that's good, but let's check it out on the balance sheet. That's where we want to see it. Let's refresh the balance sheet report. So we're working with fresh stuff. And then we're going to go down to the prepaid insurance. There it is. There it is. If I go into that, there's our journal entry. If I go into that, now it's in the format of a journal entry. It doesn't take me back to the register here. We see it in journal entry formats. There's your debits and credits if you want to see it in that format. And this is going to be, this should be AJE5. This is not a reversing entry. AJE5. Save it, close it. So there we have that. So that looks good. Going back up top, back to the good old balance sheet. Notice we have the 10,083 left, and we had 11,000 originally. So you would think if I paid for 11,000 for a year, 11000 divided by 12 months, that gives us our 916. If I multiply that times the 11 months remaining, we get about 10,083. There are some rounding involved here. And then if I go then to the income statement, next tab on over, refresh that report, running it, going down to the good old income statement, we're looking for insurance here. There it is. There's the insurance. There's the 916 on the insurance side of things, on the expense side of things, on the income statement side of things. Scrolling back up top, we can then check our bottom line number. We're now at the 9433.18. So if I go back on over here, just check our numbers on our worksheet, 9433.18. So you can see how transparent our worksheet is compared to Excel, compared to QuickBooks, where we're kind of jumping back and forth, and we can only see, of course, the end number. We can't see where we started at before the adjusting entries. So that's, the Excel worksheet's a little bit more transparent in that way. Let's go to the trial balance now. Run this one. Go ahead and run this one. This is where we stand at this point in time. So you can check your numbers here. We'll also be printing this out so you can check your numbers on your own time. Because this is our time, and you can check them on your own time if you want.